Hi everyone, today let's quickly talk about Fed John Williams and what he said about the central bank. Then we'll look at the calendars, the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Fed John Williams tried to walk back the comments from this most recent FOMC, and I think it's a little bit too late for this. Everything has kind of been let out of the bag in terms of cuts over the next 3 years. But let's see what he had to say here. He said, "We are focusing on the things that are in front of us," which is what Jerome Powell said. But we need to make sure that inflation continues to trend back towards that 2% level, which is not currently where we are. And then they also put on the dot plot for next year 3 potential cuts. And on the back of that news, we saw rates drop to 4.3%, which is the lowest number we've seen in quite a long time. It does seem like they're trying to tighten monetary policy a little bit, just with a little bit of jawboning, and I don't really think that the markets are going to pay attention to this, but it is interesting to see that they are trying to do it at least a little bit. Moving over to seasonality just for a moment, you can see today is typically a bullish day. We did kind of get a bullish day, but not really, and we'll take a look at that on the charts, and then Monday, typically more bearish after the witching event. Moving over to the calendars just for a moment, you can see global U.S. manufacturing PMI came in below that 50 line. Not great, below expectations as well, but services continuing to trend higher, better than expected, better than the 50 line, and that looks a little bit better. So manufacturing declining a little bit, services doing fine, and that was pretty much it for the Friday session. Moving over to Max Payne, you can see we finished just below 470, Max Payne 464. Total options were down to 3.8 million. Put call ratio still super high at 5. I've never seen it that high, actually. You can see that put wall. You can see that call wall, 476, well below that. Top of the puts, though, continuing to get strong closes, and we'll see how that plays out next week. I would expect a little bit of a dip, but we'll take a look at Max Payne for next week on the Sunday video. Moving over to the charts, starting off with the S&Ps, you can see we did get an island reversal, so we gapped up, dojied, gapped down, dojied. See what happens from here now. Look at this volume on that doji candle. Definitely not great to see volume ticking up with that massive step down on the day. You can see how we kind of fell in the pre-market, tried to hold in the open, and then couldn't do it and fell into the mid-session, and then rallied into the end of day, and then a little bit more after hours, watching that 21 EMA here on the hourly chart. If we continue to stay below that, that means we're going to finally get a little bit stronger pullback. You can see very strong divergence here on momentum. Strong momentum happened on 15 November. That was a long time ago. These divergences can take a long time to follow through. And then you can see the weakness in this most recent rally in terms of momentum. No divergence on RSI. We did get a higher RSI number with the higher price, so we haven't seen that yet, but clearly divergence on momentum. Moving over to the Qs, it did look a little bit stronger actually. You can see we did touch that level, and you could argue this is a double top now. Pulled back very strongly from that 406.50 area, but then we held the 21 EMA. Rallied up to that next level here after hours. 405.50 is that level. So as long as we hold above that, then your next level to the upside would be 408.80. And this does look a little bit stronger. Momentum still bullish. Volume ticking up on that candle. And it ended up being a slightly positive day. And it ended up being a positive day at about 0.5%. Moving over to the Russell and the Dow. The Russell actually pulled back pretty strongly. 0.84%. Still bullish momentum, but RSI pulling back quite a bit off of that 198.75 level. Dow also moving slightly lower, 0.19%. And you can see that volume continuing to ramp into that down move. So might be a little bit of profit taking there. We'll see how that plays out on the Monday. But it is interesting to see that bearish candle almost engulfed on the Russell as well, off of that really strong up move. Moving over to Apple and Tesla. Apple looked like it was rolling over a little bit here today. Got below 196.79. Did close below it as well here after hours. So not great. Bearish momentum. Looks like Apple might be moving a little bit lower. Did touch that 21 and bounce from there a little bit after hours. So we'll see how that plays out on the Monday session. But Tesla, big rally up. Did not move basically from yesterday's peak high. So slightly bullish on the day. Could not get to 255.44. Momentum starting to taper here a little bit, but still bullish structure, and RSI is still bullish, so watching this one closely. If it gets to that level and breaks, then you could be looking for 264, but if it breaks down from here, then you're watching for that 9 EMA sitting at 249.45. Moving over to staples and discretionary. Staples slightly positive. Staples were technically flat to the penny. Pretty crazy. You don't see that very often. Gap down, closed at the exact same level. Still holding above the 9 EMA, so technically bullish still, even with that big bearish candle on Thursday. And then the discretionary is 0.21% to the upside. Still bullish momentum, still super overbought on the daily chart. In terms of levels, still watching 180, basically no change there. And then 185.36 to the upside. Moving over to breadth, this is not what you would want to see if you're expecting to go higher. You can see that wick high yesterday and a pullback here today. Doesn't mean we can't hold here at the 9 EMA or at this 83.83 level. But if that breaks down, we're looking at the 21 down at 79.24 on the 50-day breadth. And then looking at the 200, we did get a pretty solid down candle here today, 3.73% to the downside, almost engulfed the previous candle after touching that 76 level on yesterday's candle. So interesting at this level. No divergence, momentum, clear divergence, RSI, no divergence yet, clearly a higher high with a higher RSI. But this is an important level. We don't get here very often. We've talked about this many times. Got very close here in July, didn't quite touch it. And then you can see this is the absolute peak high from that 2 February high, and that ended up being a very strong reversal from that level. So definitely a critical level. We touched it yesterday and then pulled back from it today, and that could be quite ominous going into next week. Moving over to the dollar, pushed very strongly into that 102 area. We talked about that yesterday, and then rallied up pretty strongly from that level here today, 0.63, really strong candle. Got well above the 21, broke through there, tested the 55 on the hourly chart, broke through there. Momentum starting to fade. This is a strong short-term rally. But you can see the 9's well above the 21, short-term bullish structure. Has a ways to go on the daily chart before we get into major resistance up around this 103.64 level. But short-term bullishness, definitely worth paying attention to here on the dollar. Moving over to the VIX, you can see we peaked up a little bit. You can see we gapped down and then rallied a little bit. Still in the same zone between 12 and 12.5. Still below all of the EMAs with a slight bullish momentum. No change in terms of structure here for the VIX. I still think it's interesting that we're holding at this level. Again, we can do this for a very long time. You can see a similar price action. Touch this level, rally up, pull back, rally up. You can do this quite a few times before you start to see that spike. That could be a couple of weeks in terms of time in that space. You can see we had a similar move here where we just chopped sideways and then broke down a little bit. You could see that again here for the next couple of days. But it is interesting, slight bullish momentum, and I'm watching it pretty closely off of that 11.77 area. Moving over to my accounts, I think I was up about $50, nothing crazy. Obviously, I lost a little bit of money on the IWM as it went down. I actually decided to roll in and down on these calls. I was all the way out to like 60 days, something crazy here. But I decided to roll in. We did see quite strong weakness on the IWM after the strong up moves, and I do think we could see a pretty decent roll down there. We'll see how that one plays out next week. Over the medium term, I'm still bullish on the IWM, so we'll see how I may adjust this back out. I'm not exactly sure yet, but we did see strong weakness. I decided to roll down into it for credit, and that is something that I'm watching closely. And then I probably made a mistake here on the Qs. I decided to not leave that put on for Monday, and it is up a little bit more after hours. Not great. I just have my 4 calls here and my 200 shares. I did roll this out to 63 days for a 400 strike for $16 credit, so a lot of credit there. Have about $10 more of upside. Certainly possible that we just continue to rally super aggressively, but nothing goes in a straight line forever. We will see some pullbacks. The question is always about timing. Will it happen over the next 2 months? Right now, technically bullish on the IWM, slightly bearish on the Qs. Let me know down in the comment section what you thought of the jawboning. Can they actually walk back any of the FOMC comments, or is it a lost cause at this point? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.